Hello there, you're watching Dukascopy TV. I'm Thomas Taplin, and today we're looking solely at the currency market. Now, we're used to trading the majors such as euro-dollar, dollar-yen and such, but what about alternatives that have long been waiting in the wings? The ruble, for example, or the Chinese renminbi. Just why are these currencies not appetizing enough for investors, and will there ever be room for them? Well, helping me decipher all this is senior analyst Angus Campbell at FxPro in London. Angus, hi. First of all, we know currencies like the ruble and renminbi are extremely expensive at the moment, but could there ever be a time where they are a viable option? And what could be the main driver or drivers behind that?
Well, it's a very topical question you ask, and that's something that's debated fiercely and has been debated fiercely over the last few years. Will the dollar be replaced by something else as another world reserve currency? I mean, certainly what you have to appreciate is that the global economy is growing, and it is growing at such a pace that there will be greater demand for other currencies. There has to be a greater deal of currencies for transacting in because as the global economy grows, there'll be further demand for more products and services in other economies, in particular those emerging economies such as, say, Russia and China. So those currencies, whilst at the moment they may not necessarily have the sort of liquidity to be able to easily transact in them, they will be becoming more and more important in terms of financial transactions. More people want to transact in the Chinese renminbi and in the Russian ruble as they do business with, within those economies. So it will become more important as time goes on, and I'm sure that somewhere down the line, the dollar will be replaced as the world reserve currency with something else, but it is still quite a long way off.
Recently, CLS Bank, the operator of the largest foreign exchange network, wants to bring the ruble and renminbi into its network to plug potential systemic risk. Does this mean that these wider Forex trades are posing more of a risk now than ever before? And might we see other banks begin to follow suit if this continues?
No, I think that it's perfectly relevant because, of course, clearing in these, if there's greater transactions made in these currencies, then you need the sort of plumbing that goes behind it. You need the clearing, you need the settlement arrangements so that you're reducing counterparty risk, and that's pretty critical to FX transactions. So it's only a natural thing. As demand increases for these transactions in these other currencies, then you're going to have the systems in place to be able to clear and settle in those currencies. So yes, as demand increases, there will be more banks and settlement houses and clearing houses that will provide those services in order to ensure the smooth, much smoother transactional process.
Now, traders obviously know what they're trading, but what are the benefits of investing in these new and alternative currencies starting to take shape on the foreign exchange market?
In respect of volatility, they could potentially provide trading opportunities, but also in terms of financial transactions, if you believe that the Chinese renminbi or even the Russian ruble will present a good investment opportunity because either there are high interest rates there and you could get a decent yield from holding that currency, then that of course presents an investment opportunity. You'll also be investing in the underlying economy. So if you think that those currencies will appreciate in value, so that there's the potential upside there as well.
Finally, Angus, should brokers be thinking about expanding properly now and starting to allow for currencies like the ruble and renminbi to become a much bigger part of their operations?
Well, it is still, I mean, in terms of FxPro, these currencies, these emerging market currencies, make up a very small proportion of our trading. We actually, funnily enough, have seen in the last couple of weeks, with this sort of mini emerging market crisis that has evolved. It's not really a crisis; really hasn't sort of morphed into that yet. Not saying that it will do, but we have seen the volatility spike in these currencies, and we've seen an increase in trading in these currencies. So that's probably more a short-term thing as these currencies, experience this volatility. But certainly in time, there will be greater demand for them. Brokers will have to address that because they will simply notice the demand from their clients, and that's whether it's for trading purposes from a speculative or investing point of view on the fluctuations of those currencies, or whether it's a transactional basis, to actually convert currency. There will have to be, the supply will have to meet that demand that will come from clients around the world.
Okay, interesting stuff. That's all we have time for at the moment. But if you'd like to stay up to date on alternative currencies, don't forget to check out our frequent interviews on the emerging markets. But for now, bye-bye.